Hey, this is Pat Iyer with Legal Nurse Podcast, and today we're going to talk about a subject that is near and dear to everyone's heart, which is managing your money for your business. I brought on the show a woman who I met at a conference in Florida who is a whiz when it comes to looking at some of the financial issues associated with running a small business. She's a best-selling author. She's a regular magazine contributor with a monthly financial column, and she has worked in international finance for over 3 decades. She speaks on business and finance for multiple government organizations, colleges, and on the radio. You may indeed have even heard Sue Thompson on 96.5 FM and 600 AM. And she will be launching her own podcast called The Business of a Successful Practice. So, Sue, welcome to the show. I'm glad that you could join us today.
Thank you, Pat. I'm glad to be here.
We have listeners in all different stages of their business development. Let's take us back to the moment that we decide to start our business, or we're thinking about starting it and we're looking at, what are some of the things that I should consider when I'm in that early stage? Can you give us some insight on that?
Sure. I think that it's an odd thing to think about at the beginning, but you really want to think about what the exit strategy is going to look like for the company or the business. In other words, for the sake of what are you creating the business? And there are really 2 ways to set a business up, and one is to make it a cash machine, so something that's throwing you cash that you're then going to invest and make life work on a personal basis long term. The other way is to build an asset, which is to create a whole system and structure with team that operates eventually without you, and then you sell it as an asset at the end. And the reason that we want to think about those things up front is because those will dictate an awful lot of the systems and structures that are best for us to put in place right from the beginning.
I know that many people who are starting their businesses are not thinking about those questions. So that's great that you brought up those points. One of the dilemmas that we experience as service businesses is that we establish strong relationships with our clients who see us as the business and can't conceive of running their law practices without our help. So if we leave, then they say, well, nobody could possibly do what you do. I couldn't possibly connect with a new owner. What would you say to a business owner who is thinking along the lines of the cash machine piece and not even thinking about the transition?
The cash machine piece is fine, and it's a great way to control your own calendar, to control your own levels of revenue and income. And it's typically a business that's built around you and your skills and what you bring to the table for who you're serving. One of the things that's important then is that you understand from a cash flow perspective what that business is going to do for you for today and for tomorrow. In other words, when you're thinking about your pricing and when you're thinking about your how you're going to use those funds over time, you want to think about how much does it look like for me to have the kind of life that I want to create over time. When you're thinking about working with an individual, so your client who adores you and loves you and can't possibly think about working with somebody else, you can set up the systems and the structures for both of you in a working relationship that then that baton could be passed if you chose to move on to something different or to have somebody take over your business long term. So hopefully that answered the question.
Yes, and I think it's a great question to think about that new business owners don't think about at all in the beginning of what's the end game for me, because the questions that absorb them are, how do I get clients and what should I charge and how do I make sure that I'm getting my invoices paid and what systems do I need in place? And it goes on and on and on of that workflow piece, in your experience, just looking at the financial piece, what are some of the issues that you see that business owners struggle with, aside from what we've already talked about of that decision of the cash flow machine versus building a legacy?
I think the biggest thing I see with entrepreneurs is reinvesting too much money back into their business without paying themselves. And so, for example, in the scenario of a cash machine, the whole purpose of that business is to generate cash. So the cash has to have a job. In other words, what's the money for? And the clearer you can be on what the money's for in the long run, in the long term, so you're leaving a legacy in a different way, right? Instead of leaving a legacy with your business, you're leaving a legacy with what you're building in your home life or in your contributions in other ways on top of the work that you're doing. And so you want to be really clear about, what do I need to pay myself in order to make life work on a monthly, weekly, daily basis? And then what do I need to reinvest in me, and what do I need to reinvest in my company to make sure that it's sustainable long term?
That's a crucial point that I've seen many people get involved in, of not paying themselves enough, and then they get strapped.
Mm-hmm. And then what's really sad is when the day comes that they don't want to do it anymore, their options are really limited because they didn't have the thought process of what they wanted tomorrow to look like for them. And so it has to keep going in the way that it's always been going because there wasn't any planning or investing for the future.
I know my husband and I discussed this when I ran my legal nurse consulting business, and I paid myself a salary that he said, "Oh, Pat, why are you giving yourself that much money?" Well, now I'm getting a Social Security check that's paying me out at the maximum level that you can be paid. And he's not complaining at this point, I've noticed.
Yep. And that's a strategy, right? It was a forethought in order to make sure that life works both today and tomorrow. So that's the perfect way to do it.
Mm-hmm. Tell us a little bit about how we can track our income, because I think that this is a weak area for many legal nurse consultants, the tracking of income and expenses. I know that there are legal nurse consultants who don't always appreciate the difference between using a personal credit card and a business credit card, for example. Or they wonder, do I really have to write down my miles? Or what do I do about the copies that I made for the attorney for the report? Can I charge him for the paper? I've had legal nurse consultants who were my expert witnesses want to charge me for the phone calls that they made to me, and I ended up developing an agreement that said these are reimbursable expenses. These are not reimbursable expenses. The fact that you had to stay over in the other city and didn't have clothes to wear for the next day doesn't mean that you can charge me for your shopping time. I know you had to get them, but that's not a billable expense. So give us some insight about tracking numbers.
So there's inflows and outflows, and it's pretty black and white. What's really important is if you're not tracking it, I'll guarantee you're leaving a lot of money on the table. And the biggest way you're leaving that money on the table is by paying way too much in tax. So what's important is that initially we're tracking inflows, right? The top line, we got to make sure we can keep the lights on and pay the bills and put gas in the car and get the groceries. And we want to make sure that those numbers are growing and they're growing appropriately. In other words, the money will go somewhere. And if we're not planning on it, if we're not planning where the money is going to go, and we're not tracking to make sure that's where it actually went, it will disappear. It will fly right through our hands. So I have, that's actually when a lot of clients will come to me. One or two things is happening. It's like, I'm working really hard. I'm making really good money, but I don't know where it went. I don't have anything to show for it. Or I'm working really hard and all I'm doing is writing big checks to the government. And both of those scenarios are because of not having really good tracking systems in place. So when people are first getting started, I say just use an Excel spreadsheet, like just track the inflows and the outflows. That'll give you, a little bit of a cash flow picture, and it'll also give you, you'll pay attention to it because you're writing it down. But what it won't give you is any good, solid reporting out the other side. And eventually we want to move from running our business from the checkbook to running our business from the numbers. And the numbers come to us in a profit and loss statement and a balance sheet, which is something that you want to have from a piece of software that'll help you. 99% of my clients can use QuickBooks, and it gives you, it's an integrative accounting software, but it operates a little smoother for the end user if you want to do it yourself, as long as it's set up right. Otherwise, you can make a mess with it. And it will give you all kinds of good integrative reporting, and every business, the kind of reports that you want will be tailor-made for you based on the goals that you have.
Is this a do-it-yourself project of setting up QuickBooks?
I don't recommend it unless you really know what you're up to. And because garbage in, garbage out. Like if you've got a good footprint that somebody established for you and you want to learn how to manage it when it's small, that's not a bad idea. But to just try and set it up on your own, I haven't seen too much success with that with most people.
And one point that I think is interesting with QuickBooks that I've discovered just a few years ago is the concept of keeping the data on the cloud so that you can work with an accountant or an agency in another part of the world or another part of the country, which never used to be the case. Before cloud computing existed, you needed to have somebody who could walk into your business, or you could walk into that person's business with your data available for the types of reports that you're talking about. Has that also changed your business in terms of how you work with clients?
It has significantly. So we work with clients all across the United States. We also have some in Canada, and we even do some consulting internationally. Numbers are numbers, which is fabulous. The whole online banking process, as well as cloud accounting, allows us to work with clients just about anywhere, because the information is really easy to put your fingers on, and then we can put that information into the accounting so that the client still has access to it, can see it when they need it, and it allows a client to connect with that accounting in real time, as opposed to waiting for a hard piece of paper to come that they need to look at, that they might just put in a drawer somewhere. So it's allowed us to do consulting with clients all across the U.S., which has been wonderful. Yeah.
And those reports, which at first sound very intimidating when you talk about cash flow and you talk about profit and loss, can you give us any hints on how we as non-financial people should be communicating with our financial people in terms of what we want?
That's a great question. I think that learning how to work with a financial team is a process, and it's a relationship. So one of the things that you want to make sure that you're not doing is just abdicating everything off to somebody else and then never looking at it again. That causes a lot of issues. One of the other distinctions I like to help people understand is that in your financial team or in the financial management world, there are bookkeepers, there are accounting officers, and CFOs, and then there are the CPAs. And it's really important to have an understanding of what each of those people bring to the table and how to best work with them and have the right expectation of their skill set. So your CPA's job is to keep you in compliance with tax, to file your reports on time, and make sure that you're paying the least amount of tax possible. they can only do that based on the information that you provide them. So it's important to have good numbers on a timely basis that you can have strategy with and all those kinds of good things. And how you get those numbers is either through accounting or through working with a bookkeeper. I recommend that people start with an accounting firm such as ourselves, because then we're bringing that level of expertise to the table to help you learn how to connect with your numbers. Once you know how to connect with your numbers, you can then have a bookkeeper on your team. It's more expensive to have somebody on your team, but when you get big enough, that works. But having somebody who's got your back in the area of making sure that you're connecting with the numbers as they're taking you on to the goals that you have, whatever that is for you, whether it's a cash machine or whether it's building an asset, we want to make sure that we're always staying on track. And the numbers are the best way to be tying into them, to look at them, to see on a regular basis where you are, because then in real time you can make adjustments. So staying in front of receivables, making sure that you're priced properly, making sure that your payables are being handled, and that the cash is flowing in a way that makes life work today and tomorrow, like we talked about earlier. All those things can be seen in your reports. And so the more accurate they are, the more timely they are, and the more often you look at them, the more you'll learn to make decisions from the reports rather than just kind of flying by the seat of your pants.
That's a terrific reminder. I think as small business owners, we get caught up in the day-to-day responsibilities,
Mm-hmm.
and looking at the numbers, looking at the reports, although important, seem less important to us
Mm-hmm.
than making the marketing call or working on the cases. I've had legal nurse consultants who've been so absorbed in performing work for attorneys that they've almost resented having to take the time out to do the invoicing,
Mm-hmm.
which is necessary to keep the cash flow going.
Mm-hmm.
So until you have a business that is large enough to support a bookkeeper, there's almost a constant sense of running to try to catch up.
And that's really common for entrepreneurs, especially getting started. We wear so many hats when we're getting started, and we have so much passion for the output of what we're doing and the impact that work has, that the administrative side, if you will, does seem like a headache to take care of. Having said that, I have seen it over and over and over that if you don't put the systems in place soon, eventually you'll hit a wall that you can't go any further until you do put those systems in place. So if you can build the muscle of working with it earlier, then it gets easier and easier and more sustainable as things continue to grow.
And do you advocate that everybody have a budget when they are starting a business?
Yes, I think it's really important to have some sense of numbers to look at to compare what's actually happening against. In other words, if we don't have a filter system, and that's basically what a budget is for us, is a filter system. I like to call it a forecast instead of a budget, because it's like dieting versus a lifestyle, right? But it's that benchmark that make the real numbers, our actual numbers, have some meaning. And so some of it's a learning curve. If we're brand new, we might project that we're going to spend $100 in advertising, and all of a sudden we realize that we spent $300. Well, then we get to ask a lot of questions, right? Did that work? Didn't it work? What was the return? And then make another decision. But if we didn't have the $100 to compare the 3 to, we'd just keep spending the 3. So it's important to have some kind of relevancy for the numbers as they're happening.
Well, I have been guilty of spending more money for advertising than I realized because of all the calls that occurred. There was one advertising rep who was very persuasive, and she was calling me several times a year to take out half-page or full-page ads in her publication, which was a directory of healthcare experts. And one day I asked my bookkeeper, just how much have we spent this year with her? And I was shocked at the number I hadn't asked that question before.
Mhm.
So I realized that if I took that amount and I put it into getting more repeat business from our current client base, rather than chasing the prospect, I might end up better. And it turned out I did end up better. We got much more business from our existing clients, proving that old saying that you spend, I don't know if it's 5 or 8 times more to acquire a new customer than to keep your existing customer.
Mhm. And when you have a happy existing customer, then the referrals come, and that's what makes a big difference. Yeah.
Absolutely. And those referrals are free. Isn't that the
Mhm.
wonderful thing about them?
Yeah. Yeah.
As we're plotting out this, what should we be thinking about in terms of a profit margin? What's a good profit margin?
That's a great question. When people are first getting started, I usually like to give them an easy way to look at it. So, a third of your revenues you want to have going to costs. A third of your revenues you want to have to go into reinvesting, whether that's through team or advertising or whatever your strategy is. And then a third of the cost you want to have to come to come to the house. In other words, if we can, especially in a service-based industry, if we can have that 30% profit margin to be building the kind of life that we're looking for outside of the work that we're doing every day, that's a great profit margin to be looking at to get to in the long run. Initially, you might be reinvesting more than that and have a smaller profit margin, but eventually that's what you would want to build towards.
All right, so a third, a third, a third.
Mm-hmm.
Perfect.
Yeah. It's the same like if you're hiring team, you want to think about, you want to pay them a third of what you're going to bill them out for so that you can keep that margin. Yeah.
And that is a good point because many legal nurse consultants hire out subcontractors or they hire subcontractors. And they want to know, how much should I pay this person? And the subcontractor says, oh, well, that's easy. You just pay me what you're going to be billing me for.
Mm-hmm.
And, I'd like to be paid $150 an hour, and you can bill $150 an hour, and we'll all be perfectly happy. No, we won't be.
No, it doesn't help with the overhead. It doesn't help with acquiring the client, and it doesn't help with the risk that you're taking as the owner of the whole show. So there, you have to remember, and as service providers, especially as women, we're more the caregiver side of things, and so it's you want people to be happy and you want them to thrive. It's one of those things to remember. You've got to put your own oxygen mask on first.
Mm-hmm.
You have to be able to take care of yourself first.
Mm-hmm.
Yeah.
I had an expert witness from another part of the country who was very difficult to work with and very demanding, needed to travel first class, charged very high numbers of hours on the case. And when we were all done and I was just wrung out from the experience of working with her, she said, I'll work for you again, but this time you'll take $25 an hour for profit and I'll get the rest. And I thought, I don't think so. We're not working on that model.
Yeah. Yeah.
Yeah. You need the profit margin. I think that's a really important lesson for this. Let's finish up by talking about planning and what we should be thinking about in terms of the frequency of looking at our numbers, what we should be thinking about in terms of planning ahead. Give us some insight on that.
When I do planning with my clients, I always start with to think ahead as far as you can. So for some people, thinking ahead for a year is about as far as they can go. Others, it's 5 or 10. So if you think about the big picture long term, what it is that you want to create in both the impact with your business, but then also in your own personal life, then it helps us to come backwards to, okay, well then in the next year, what are we going to do and what are we going to create in order to keep you on that trajectory? And, one of the things you had mentioned before of somebody being a persuasive marketer to you about their widget that can help your business grow, there's a ton of ways that we could invest our money to make our business grow. The trick is figuring out what's the best way for you and what's the best way for you today. And the answer in that lies in the planning that you're going to do. In other words, if we know that in the next 12 months, we've got to acquire 5 clients or 10 clients, and this is our strategy to do it, whether it be referrals or taking out ads in the paper, we're going to put together a forecast that's going to make that happen with how we're going to invest our time, our money, our energy. And then as different marketers come along and say, well, what about this widget, or what about this shiny object that could help your business grow? It worked over here for Jane. It'll work really good for you too. And the truth is it might, but that's not what's on your plan today. So it helps you to kind of say yes or to say no to things along the way. As well as having that real-time check-in. So I encourage my clients to look at their numbers once a month. We have clients that are, newer, and they probably get to it once a quarter, if truth be told. But at least once a quarter, you want to be looking at things to see where you are on your trajectory. Because if you're off, then the longer you wait to look at it, the longer it is before you'll course correct. And that's just human nature. I mean, it's the way all of us work. So even those of us that have been in business for a really long time, like I look at my numbers every week. Now I know I enjoy that kind of thing, but it's it's a piece that keeps me on track and keeps me focused. And but I do, most of our clients, I try and have meetings with once a month, or encourage them to look at their numbers once a month. Yeah.
I spent several years whining about the fact that I wasn't getting these reports on a frequent enough basis. And it was really an excuse because I didn't enjoy the process of looking at the numbers, and they intimidated me. Mm-hmm. And then I put QuickBooks on my computer, and I had no excuse. I could run my own reports.
Yep.
But I was a little passive aggressive for a while with a person in my business who was in charge of running the reports, who himself was caught up in other things and didn't think about it. So I think sometimes we can sabotage ourselves, or we can avoid things that we don't want to do and get all filled with rationalizations and justifications as to why we're not paying attention.
Absolutely. And especially with money, because it's a really hotbed for emotion. We tie a lot of stuff up in our relationship to money and how we think it makes us feel about where we are in life and what's going on in life. This is why I love the planning process. I call it financial forecasting or dynamic planning, so that you've always got that reference point or that place along the way that you can check in to see where you're on track or where you're off track. And then it just becomes a thing that you do without the emotion. It takes the emotion out of it. And when you have a clear goal that's got numbers attached to it, it really does help you to stay on track. It helps you to stay focused on what you're doing on a daily, weekly, monthly basis, so that you're willing to do the things like look at the numbers, because you know it's taking you to the goal that you want, creating the kind of life that you desire, making the impact that's important for you to make. So that's why we're willing, if you will, to step into the arena with money and numbers and all those kinds of things, when we realize it's just a tool that helps us get where we want to go, whatever our goals are.
Tell our listeners about your business and the services that you offer.
Okay, thank you. So my company is the CFO Agency, and we're based in beautiful Kalispell, Montana, right outside of Glacier National Park. We work with small to medium-sized companies. We can meet you where you are, so whether you want to do it yourself, whether you want us to do it for you, or whether you're ready for a CFO level of strategy and planning to take your business to the next level. We offer all of those services, as well as the tax and entity strategy to help you keep more of the money that you're making in your pocket. So Like you had talked about before, we work across the United States with virtually with most of our clients. And platforms like this, which allow us to meet with people face to face, have been really helpful to have the kind of relationship that's important for us to have with our clients. It's a partnership. We're getting behind you with your numbers to make sure that you hit the goals that you have with your work. So you can find us at thecfoagency.com, and or you can reach out to us here at the office, and our contact information is on the website.
Perfect. So that's CFOagency.com.
TheCFOAgency.com.
TheCFOagency.com. Thank you for that clarification.
Yeah.
Well, thank you so much, Sue, for giving us some guidance in, for many, what is a difficult subject.
Mm-hmm.
And you make it sound so easy and so tempting to say, yes, Sue, take care of it for me. I can see the appeal.
That's a good thing.
That is wonderful. Thank you for being a guest on the show.
Thanks for having me.
And thanks to you as the listener who is tuning into this show, learning tips about managing your money, tracking your money, the importance of budgeting and planning, the fact that it's important to run those reports every month, at a minimum every quarter, so that you can stay on track and you know where you are in terms of your income and expenses. It's also a great way to figure out who owes you money. That's another important report to run, which we didn't touch on today, but was one that I studied pretty carefully to look at what invoices were outstanding, and then it would stimulate phone calls and collection efforts.
Mm-hmm.
Be sure to download the Biz.edu app from legalnursebusiness.com. That website address is legalnursebusiness.com/BizEdu, BIZEDU, which is our new mobile app where you can listen to podcasts, read articles, watch webinars, watch videos, and get free reports and writing tips all in one app. Thank you so much for being a part of Legal Nurse Business and Legal Nurse Podcast.